Good morning, ladies and gentlemen. A warm welcome. It's turning out to be a good day on Dalal Street. We are about 200 points higher on the Nifty, 23,350. Although the intraday high was 23,455, but we'll take it. No worries on that count. Apart from the Nifty, there is strength in the broader market as well. A quick look at advance decline ratios. 2250 shares in the green, just 316 the red. So very easy, 7:1. All 19 indices are in the green. Take your pick. The Nifty PSU Banking Index in top shape, 1.9% higher. Alpha 50 up 1.7%. The advance decline ratio is really strong in the NSE 500. 436 shares are in the green. Apart from that, let's look at the winners in terms of volume as well as price action. HDFC Bank, it's a banking day. The Nifty Bank Index is 718 points higher. 55,900 for you. HDFC Bank 1.2% higher. ICICI Bank up 0.7%. SBI, Bank of Baroda, Union Bank, Canara Bank, all in the green as far as prices are concerned. Unusual stocks also rallying. 3.4% higher on Indigo after a very long time. Very strong volume buzz happening on Motilal Oswal Financial Services. This is the top gaining counter in the volume-led gainers, 4.5% higher. UBS has come up with a research report and is targeting a target of 1,097 on Motilal Oswal Financial Services, saying that it's shifting to a higher fee-based structure because of its mutual fund business and the growth that is expected in its wealth management business. And that's what is buzzing on the stock. Any new highs in the market? Yes. Within the F&O space, it's Federal Bank, 317, strong gains coming in. There's no stopping APAR Industries, ladies and gentlemen, now above 15,100. Surging 4% today. J&K Bank, 3% higher, 157. Hospital stock, Aster DM, 831, 2.1% higher, and JB Chemicals and Pharma, 2% higher at 2298. That's the strength of the market. We are also waiting for Mr. Sharad Awasthi to join us from Kolkata, the city of joy. Namaste Sharad ji, a very warm welcome. The market in joyful mood today.
Yeah, fortunately after a very long time.
Ji.
So most probably we are in a place where both radical people will come to the table, and
Yes.
that's very positive for us. So I think finally, as we have been speaking for quite a while now, that most probably both find it very difficult to sustain. So maybe that's the bringing them back to the table. So it's good for the global economy, much better for us.
Ji. Okay. So Sharad ji, by the way, we are speaking after many days, a change of guard in West Bengal. How are you feeling?
Yeah, good. I think it's been a welcome change. It was due for a long time. I think for the first time, maybe
Okay.
we will stop calling the city of joy the dead city.
Yeah, of course.
There's
There's no beating. There's no beating the quality of life in Kolkata. I mean, you stay there, you know what I'm talking about. I'm aware of it, and I'm jealous of you.
Yeah, I think we have never seen so much action in this part of the country, but somehow, every day you are on the national news. So I think that's good. Even we are very eager, we are watching every development very closely. Every day at the end of the day, we want to see what has happened in Calcutta and West Bengal. And I think even if you look at the Prime Minister's address a few days ago, even after 12 years of work, he seems relentless with respect to speed and what he wants to do. I think that is very heartwarming as a country person to look at, because that, places the country at a different level vis-a-vis most of the other countries.
Actually, about 250 years ago, even till about 150 years ago, Calcutta was the central economic hub of the country. And sadly, for whatever reasons which we should not get through into, it deteriorated. But let's hope, hope shines eternal for us Indians, and more so for those who work on Dalal Street. Let's hope you'll get many billionaires out of Calcutta in the next 10, 12 years.
Yeah, certainly,
Here's to
certainly.
that.
Certainly, certainly, sir. I think next 5 years also it's going to be very beautiful. I think next 10, 12 years, obviously, it should be much better.
Right. Now let's discuss markets.
Yeah.
What is the value part of Sharad ji finding interesting in this market? What looks good?
See, among the frontline stocks in sectors, I think IT is certainly something we are very aggressively looking at. We think the selling is way overdone in most of the IT stocks, whether it is the frontline or the mid cap part of the basket. Real estate, we have not seen this kind of valuations in a very long time. So that is another sector we are closely looking at. The likes of Godrej Properties. Godrej Properties is our top pick there. Likes of Godrej Properties, DLF, Lodha, Prestige. I think these are very good ideas. If you're looking at the smaller names, I think Shriram Properties could be something you could look at. Something like Suraj Estate looks like good, and even Keystone Realtors has corrected substantially. So I think these are good names. There are some Delhi-based. Signature is something that is North India-based. So I think that's a good name to have. So real estate, IT are certainly on the basket. I think they will do very well. Advances growth are picking up. So maybe, and most probably the MSME microfinance space, the pain is overdone with, and we will not have much more pain there. So that could be one space, that could reverse very strongly. So these are two, three sectors we are looking at. Within banking, I think HDFC Bank is a no-brainer at this level. Reliance is a large cap, looks like a very good story to have. Tata Motors passenger vehicles, we have spoken many times. On the small cap side, I think Monte Carlo is something that we have recently looked at. This quarterly number looks good. The type of diversification into non-winter wear is finally playing out, and they have an aggressive growth rate to chart in the next, 2, 3 years. So that could be very good. Among the smaller IT players, I think Cyient could be something that could look very positive over the next, 2, 3 quarters regularly as the efforts they have taken up start playing down, because Cyient DLM has already shown that improvement. I think Cyient will also show those improvements over the next, 2, 3 quarters. So that could be a strong re-rating candidate.
So, Scient is what you've looked forward to in IT. Obviously, you started your conversation with it saying that selling looks way overdone. Just one mid cap that catches your fancy in terms of IT, or any other thing that you've added or maybe looking at?
Not mid cap particularly, if you want to call it. I think LTTS is something we are looking at very
Yes.
closely. Tech Mahindra could be something that could have a lot of positive surprise to offer in the monthly quarters to come. I think the BFSI scale up is something that we are closely watching on Tech Mahindra, and I think with the new management coming in, induction basically, that should support their growth, because BFSI is very nascent for them. So Tech Mahindra is something we are looking at. LTTS, we have recommended to our clients, and I think even something like KPIT could be very good, because the correction has been way sharper.
Yes.
And, yeah, even on the consumer durable side, I think there are improvements that should be visible. Price corrections have happened in a few pockets like Voltas, maybe a KRN Heat Energy, maybe something like PG Electroplast. So these are things we are actively looking at, because they've corrected substantially from the recent highs.
Let me play the devil's advocate and take off from the last statement that you made. Are you getting interested or getting back into these stocks simply because the correction has been very steep, or have you seen signs of green shoots in Q4, especially in IT? Two stocks that you've mentioned, three that you've mentioned: Cyient, LTTS, and Tech Mahindra. Has something improved?
Tech Mahindra marginal improvements were visible. LTTS, I think this quarter onwards, most probably we will see much of the improvement. The story is sacrosanct across IT. You largely have better deal wins. I think for Cyient, the Cyient DLM piece improving, which is a subsidiary of the company, does show you green shoots with respect to Cyient. The story that we are trying to build around Cyient is that margins will improve and the business will improve. So most probably that is showing green shoots in terms of one of the subsidiaries. But I think the rest of the businesses should also do very well. And they have done the restructuring over the last, 3, 4, 5 quarters. And now we expect the results to start showing up. So that is the reason we are getting into Cyan. To Cyan TLM is the first green shoot that we have seen in the last quarter. Price movements have already been there. So I think rest of the segments also should start contributing over the next 2-3 quarters. Regularly, every quarter you should see some improvement, and that should result in some improvement. And regarding the whole basket of IT stocks, if you look at the green shoot, I think in terms of numbers, etc., it's not been very hunky dory. But yeah, in terms of the deal wins, I think that's been a very positive development across them. So once that execution starts happening, I think a lot of numbers improvement will happen. So right now, what are we baking in? We are largely baking in 3-5% kind of growth over the next 2 years. So I think 1 or 2 quarters show improved numbers. There is high possibility that that forward estimate should also get re-rated upwards. And most of them are trading at very attractive valuations. I think 15-20 times, so even lesser than that in most cases. So that makes us very positive on the whole space.
Okay, okay. So that's the deep value segment of the market. Let's hope it improves. Within the mid cap space, Sharadji, which set of earnings caught your attention? Let's keep IT away.
Yeah, so I think the MSME microfinance space is one that we are looking at. I think there it is visible that asset quality pains are behind us, and today even the advances growth numbers have come in and they seem to be healthy. The NBFC relaxation has happened over the last 5-6 months, so that should help them, and asset quality is improving. So I think that is one space you could look at, which could be spread across affordable housing, MSME, microfinance. So if you want to play that theme, I think IndusInd Bank is our top bet among the frontline players because they have a lot of exposure there. Bandhan could be a very good bet to have on your side. We've already seen some bit of bounce from the lows, but I think going ahead, it could multiply further. IndusInd, obviously, you have to keep your fingers crossed that nothing with respect to corporate governance again pops out of the coffin. So that's a challenge that you have in IndusInd. But among the frontline names, I think they have a decent exposure there. If you want to avoid that, I think then probably Bandhan is a better bet to have largely microfinance based. And the small finance banks and most of the MSME microfinance stories, they should do good. Uh, I think Muthoot Microfinance is a decent valuation, so that could do good. So these are some stories that we are looking at.
Sharadji, normally you don't hunt towards the momentum side or stocks moving in, the record high zone. Does pharma or pharma CDMO, despite the rally that we've seen, still offer value?
Pharma across the board, I would not write off, but I think you have to pick stocks within that. CDMO as a space, I think it's a bit overvalued at this point in time. And what we have to understand is that the rupee, what we are expecting is that already depreciated substantially over the last, 1.5 year now. Though this year we were not expecting it to depreciate so much, but the first 5-6 months have been like a difficult phase for rupee. So I think the rupee appreciating is something not very positive for CDMO because your comparative advantage, goes down. So I think this has been the best phase for them. Growth rates, etc., will be there. I think the type of grams growth, etc., that we are expecting should be there. But valuations seem to have run up away out of track. So I think within that smaller names, I think we are still aggressively looking at Akram's drug. I think that's a good story long term where there could be margin improvements and good scale change. And on the front lines, I think Dr. Reddy gets my attention. I think valuation comfort is substantial there. Though you don't expect much of growth also, but if the India business ramps up, there could be some margin improvements that could result in some improvement for Dr. Reddy. And the other name that I would look at probably would be Sun Pharma. Cipla. Cipla is something that looks decently valued. I would not tell mouth watering in terms of valuation. But I think within the pack, if I have to pick something, it would be Cipla and Dr. Reddy. Dr. Reddy first choice, Cipla second choice, and then the smaller names, I think Akram's drugs looks like a good idea. But
Okay, okay. Uh, Defense attracts you, lots of them making record highs, many of them languishing. The 5 PSU stocks in defense haven't done anything out of the ordinary. How are you watching defense now?
I think I'm very aggressively looking at the whole space. Within the frontline names, we are very happy. We are very bullish on HAL and Mazagon. I think those are two ideas that should do very well. In spite of most of the defense pack usually trading at obnoxious valuations, in between these guys also traded at those kind of valuations. But I think for HAL, the type of moat is very significant. Aerospace engineering is not everyone's piece of cake. So that gives you a lot of moat, and there has been a lot of development with respect to the HAL products, etc. So I think if those things happen, HAL could be something that could look very attractive, and the valuation right now I'm not that on top of hill. I think 35 times is not very expensive. So HAL is something we are very bullish. Mazagon, I think the submarine order that's been long overdue can propel the order book three times, two and a half, three times to the all-time high orders, which was around 49, 50,000 crore. So I think Mazagon is something again which we don't think that valuations are very stretched, and this order coming in could propel them to a different league. BEML on the smaller side is something we are looking at. I think that's a very attractive story, mix of earth moving equipment, defense, railways, high speed, Vande Bharat trains, etc. So I think all that should help BEML substantially. And BDL and BEL we don't have on the list. I think that's where we think valuations are attached, stretched, though they have some triggers with respect to what can happen with respect to new order flows, etc. But that is not something that we are looking at. And I think Idea Forge, in spite of its topsy-turvy turns over the last 1.5 years, have been bullish. MTAR have been bullish, but at these prices, I think maybe most of the goods are priced in. But you never know, because Idea Forge and MTAR are a very small scale based company vis-a-vis the opportunity that they can encash on. I think yesterday, because of some news, MTAR crashed, but I think that was denied later and it has recovered. But it's a very interesting story. But I think at these valuations, when I look at comparatively, maybe when I look at Idea Forge and MTAR, two of the ideas that I've been looking at, I think probably Idea Forge is a better idea to look at, because the quarterly numbers have been good, and most probably, the next 2-3 quarters regularly with this 350, 400 crore kind of order book that they will execute, most probably the numbers will be much better.
Okay. So, MTAR Technologies is a very curious case. Everybody and the world knows what Bloom Energy has done, but MTAR says that it's not been communicated. Be that as it may, क्या हो सकता है? बाजार में ये सब नहीं होगा तो कहाँ होगा?
हाँ, यही होना चाहिए.
अच्छा, Sharad ji, are you noticing the very sharp rally? Of course you are, in the hospital space.
Yeah.
Unstoppable. छोटा हॉस्पिटल, उससे छोटा, बड़ा हॉस्पिटल, सबसे बड़ा हॉस्पिटल, running away. Is this something which is, worrying, or are valuations still within your parameters of acceptability?
See, I think on hospitals across the board, valuations usually a bit of a stretch. I mean, the way they have been operating, the scale change that has happened over the last 5-10 years has been humongous. A lot of private equity interest has always been there. A lot of M&A is happening. If you look at the way Manipal expanded, across the board. Apollo's success story is well known to all of us. And I think the way Max has improved, in terms of acquisition, they kept on acquiring and turning around properties, particularly hospitals. You can call them properties because of the 5-star, 3-star treatment you get there. But I think that's how it has been happening. And I think the way Max has turned around properties and understood the business acumen of buying ailing properties and turning them around is something that I find very fascinating. I don't know, but the markets have also found it fascinating, and it's a fast way to grow, because putting up a full-fledged hospital with the infra and obviously the manpower is a big challenge that you have there. So I think it's not an easy job. So if you can take up smaller hospitals or even mid-sized hospitals, and they have not been able to rake it up, and you can improve the healthcare facility there, I think there's a huge market for this. We are still very under-penetrated in terms of beds per 1,000, 10,000 people. So I think there is a huge scope, and there is a huge scope with rising urbanization, rising per capita incomes. I think healthcare is something where the focus will be there. Yeah, if you look at maybe 1 year forward, 1.5 year forward, they might look expensive. But I think this is a very long-term decadal or even a several decade kind of story, which will continue to play out, because the base that we are sitting at is very small vis-a-vis the base these guys want to achieve over the next 5-10 years. So I think Max is something we still think is a very good long-term bet, because of the acquisition play that they can play around. Apollo, yeah, expensive, but I think largest player. I think the type of care that they bring to the table is unparalleled. So I think that would continue to be on the list if you're a long-term buyer. And I think barring the jolt that they can receive if something related to oncology comes up, that you have a cancer drug or something, that could be a bit of a hit for them. But otherwise, I think this is a good space to be in.
Okay, fair point. So, okay. How about metals? They are sort of coming off the boil. Uh, you know, stocks like Nalco, Hindalco have more or less held us through during this West Asian crisis from, say, February to uh, early May, late May. Uh, are they are they now attractive after the correction, or are you staying away?
No, I think we are largely staying away from the metal pack. If I want to play the metal pack, my same old approach is, to play it through players like who provide, the consumables to the metal pack. I think HEG, Graphite, RHIM, maybe Rain Industries as a multi-bagger idea looks good. But most of them, if you look at, they are not front-end metal producers, but they might be providing an input to the raw material makers. And there, I think the valuations are still attractive. So that is some place we are looking at. But cross metals, the frontline names or the second line names, I think the run up that has happened over the last, 1.5, 2 years, 2.5 years, doesn't leave much on the table for me because most of them are trading at 13, 14 times, even 1 year forward. Which seems fairly priced according to me, and I cannot see so much upside. Though there are murmurs, there are people, very senior people who understand the market way better than me, who are of the view that probably we are looking at a next 8 to 10 year cycle where these cyclical commodities will do very well. But I think I would wait for lower valuations where I would be more comfortable buying into them. At the current juncture, I would strictly avoid them.
Right. We'll pause it here, Sharadji. Lovely talking to you. And
Same.
here's wishing you all the best. We should be meeting in the City of Joy fairly soon.
Right, sir. Thank you.
Okay. That, ladies and gentlemen, was Mr. Sharad Awasthi, the head of equity research for the private client group at Smith's Brokerage. Thank you for watching. Stay glued.